So I ran into this Twitter post the other day, and a man's company cheated him out of his 401k. And the worst part is that it's completely legal. So you don't want to miss this video if you're employed and you are contributing to a 401k, because you don't want to do the same thing he did. There are some actions that you need to take in this video that will help you avoid the traps that this guy fell into. This is how you're not going to invest into a 401k. So the guy that we're talking about is Finance Guy. I ran across him on Twitter, and if you're gonna get cheated by your company out of your 401k 100%, then you really have to change your name away from Finance Guy. But I'm going to assume that he's your typical Gen Z or millennial who job hops a lot, right? Because after 1 year, he quit his job and he lost his 401k. So I'm going to drop the link to this Twitter post in the pinned comment below. But it looks like Finance Guy wasn't fully vested, and that is why he is ineligible to his 401k. And right now he is very frustrated with the system, to the point that he might not ever contribute to a retirement plan again. What a smart idea, right? But he's frustrated because he didn't read the fine print, because it was all laid out in the fine print. If he had read it, he wouldn't have been caught up in this trap. I mean, young people these days. So Finance Guy was wiped out almost $3,000, which is chump change compared to the people that lost money with Celsius, FTX, SVB, and Credit Suisse. That is nothing compared to those losses, right? But it's just some entitled kid who's right now huffing and puffing because he made the mistake of not reading the fine print, and now he is blaming everyone else and not owning up to his responsibility. But I can't blame him, because I myself, I didn't know whether I was vested or not with my employer and my 401k. So immediately after reading this post, I went to my employer and asked them whether I was vested or whether there was a vesting schedule with my company. And they told me that I am completely vested. There is no vesting schedule, which is what you want to hear from a company. But here's one action that you have to take immediately after watching this video. If you're employed by an employer, and if you're contributing to a 401k, or your employer is contributing to the 401k, immediately email them or email HR and ask whether you have a vesting schedule. Because what I don't want for my viewers is for them to go through the same troubles, the same trap that Finance Guy has went through, and then end up kicking and shouting and not taking responsibilities for something which could have been an easy problem that could have been solved. Now, if you guys are getting at one thing from this video, it's going to be this. According to the IRS, an employee's own contribution to the plan, for example, employee elective deferrals deducted from salary, are always 100% vested or owned by the employee. That means that the employer cannot forfeit or take back any of it for any reason. Employer contribution, on the other hand, these can range from immediate vesting to 100% vesting after 3 years as defined by the plan, generally 1,000 hours worked over 12 months. And in this example, they're actually using a 6-year graded vesting schedule. Now, there is one catch here. When 100% vesting is required, that is when all employees must be 100% vested by the time they attain normal retirement age under the plan, or when the plan is terminated. So basically, if Dividend Kid was, let's say, 66, and during his tenure at the company, he turned 67, he would be 100% vested. So did the company cheat him? Well, yes and no. No, because it was in the fine print. Yes, because morally, it's wrong, it sucks, and it just happened. Did the Finance Guy deserve it though? My answer is yes, he completely deserved that 100%. And here's the catch. The catch is that he had no personal contributions to his 401k. Everything came from the company. The 401k contributions were from the company, and they were on a 5-year vesting schedule. And the Finance Guy only worked for the company a little less than a year. If he had made it a year, then he would have copped that 20% of that 401k contributions from the employer. But he just didn't. And this is a good way for the company and all companies to protect themselves from what I call young employee turnover. If you want to protect yourself, if you're being employed by someone else, you want to make sure that the company you're working for has an immediate vesting schedule. That means that you are vested 100% right from day one. Now, all employers don't need to do this 100%, which is what I disagree with about the Finance Guy about, because he was frustrated and he said all employers should do this 100%. No, they don't. This is 100% completely a way for companies and employers to protect themselves from quick turnovers, because some people just like to get hired and then right after 2 months, they will start looking for another company that is offering them a bigger paycheck. What some employees fail to understand is that recruiting, hiring, interviewing, all of that costs money. And we know that when it comes to Gen Z and millennials, they're completely different from the behavior of Gen Xers and boomers. Instead of showing loyalty, the younger generation tends to switch jobs a lot more often, right? And if you're an employer, who would you rather favor? Someone who is loyal to your companies for years on out, or someone who is just looking for the other better option, the next one that is available to them? Let me know in the comments. For me, I'll pick the loyal one any time of the day. So there is a big difference in behavior between Gen Z, millennials, Gen Xers, and boomers, right? Dangle a bigger paycheck in front of Gen Z or millennial and they'll jump for it, right? Which is compared to the older generation, they tend to be more loyal. So if you're an employer, who would you rather keep? Who would you rather show favor for? Someone who's loyal with you and will stay with you for years, or someone who will just jump for a bigger paycheck? Let me know in the comments. If I was an employer, I'll pick someone who's gonna stay loyal to me and work for me for much longer than a year. Now, if you feel lost about all this 401k, employee matching, vesting schedule stuff, leave comments. I try to answer every single one of my comments. And don't fret, because I remember coming here from Canada to the US in 2016 and I knew nothing about this stuff. Luckily at that time I met my financial advisor and he gave me some advice, and that advice was to take the max that my employer will match, and that is the free money part that I'm talking about. And if you want to learn more about that, please be sure to smash that like and subscribe button, and then comment in the comment section that I want to learn more about 401k employer matches. Don't feel overwhelmed right now. Take things step by step. To be honest, in this past 6 to 7 years, I have to come back and remind myself how all of this stuff worked, and there's a tree branch ahead of me. But that's what I want you to do, right? And every year, your company may change how they vest. They may change how your 401k works. So it might be a good idea to actually save or bookmark this video so you can review it later. Maybe every single year, come back to this video and remind yourself of how all these things work. So now that you know all this, be sure to watch my next video on how I earn tax-free real estate income, no work required. And guys, this is a retirement IRA hack. So you don't want to miss this one, because it doesn't cost you a lot of time and you're going to learn how to print money in your retirement so that you don't have to worry about money ever again.